The Taiwanese index is up around 19 points, quite flat, but with some positive bias.
A lot of these emerging market currencies are getting stronger against the U.S.
The Supreme Court takes suo motu cognizance of the gruesome rape and murder of a trainee doctor at R.G. Kar Medical College in Kolkata.
24,477. And that's the first level that the market needs to stay above. 24,618 is where the Nifty is at, 616. That's about 70 points higher.
Capital market still looks very exciting.
Around 41 gigawatt of thermal power capacities was under resolution, of which 25 is already resolved.
The markets, it's a slow grind down to the flat line for the benchmark indices.
I will try to maintain the same number.
In last 1 week, we have seen it come off to levels of around $5,550. We did see a sharp spike. We've come off from the highs, but still in the green so far for the Nifty.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was a day so far, and it has been a quiet day if you look at the Nifty, but broader markets are doing just fine. This is Closing Bell. Last hour of trade coming up from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Guys, good afternoon.
Hi, good afternoon. Well, yeah, I guess quiet start and some volatility hitting some of the Asian markets again. For instance, the South Korean market, the Nikkei, they were actually looking at a lot of profit taking today. So by that stretch, maybe not that bad. Some consolidation.
No, absolutely. I think Kospi was up 2% on Friday, so maybe they're a bit of pullback. In Japan, of course, has been all over the place, 10% down, and then recovering almost most of it, I think, right?
It's a huge, deep, large capital market, yet it moves like a mid-cap stock.
As I think the Financial Times wrote an article saying that why is Japan moving like a penny stock?
Exactly.
And, but yeah, it was a shocker that, of course, the week before, that is, I mean, that I think it was the 2nd of August, it was the 5th, it was the Monday when markets moved like that. Anyway, let's just quickly run you through what's happening right now, which is, at least on the Nifty, not very much. 30, 40 points higher is what you have. So we are trading above the 20-day, which essentially is the first kind of prerequisite for the market to stay sort of healthy and then look up and wonder about how high and where it can get to. But it is nowhere close to getting to that gap area, which is 24,686. And it's been in this zone for a while, 24,577. But the trajectory is higher. Nifty Bank, true to character, is the weaker of the two. It never got to the 20-day on Friday, while the Nifty crossed it. And it is weaker, slightly down, about 0.25% or so. Midcaps are up, but it's a small cap index, which is up 1.5%. And that is essentially the star of today's trading day. That's the mid-cap index, a quarter, nothing. But the small-cap index is the one which has got about a 300-point pop. And that is essentially basically the reason why, I mean, I think portfolios will be feeling quite well because so many of these, smaller names are popping up 5, 10, 15% in some cases, which some of them we will get to as we go along. Reema.
But after Friday's more than 2% rally on the benchmark indices, it's good to see that the markets are holding on to those gains and consolidating. But we've consolidated in a pretty tight band. So the Nifty range today has been just about 100 points. Banks are underperforming a bit. So the Nifty banking index is down close to about 150 points. But in that, the PSU banks are outperforming. So the Nifty PSU banking index is a gain of 1.5%. The problem is for private sector financials banks, large ones like an Axis Bank, ICICI Bank, HDFC Bank too is under pressure. Remember today, Finance Minister Nirmala Sitharaman will be holding a performance review meeting with the public sector banks and the PSU banks, so whether it's a Bank of Baroda, Canara Bank, Union Bank, all of them higher in trade. IT too is having a good day. It was the standout performer on Friday and it continues with the up move today. The Nifty IT index is up nearly 0.8%, with LTI Mindtree leading the charge in the frontline pack and metals as a pack. So Tata Steel, Hindalco, JSW Steel up and about. The Nifty metal index will also come up for you on your screen.
Well, on the mid-cap screen, actually the good news is that if you look beyond the index will tell you that there's just about a 0.25% sort of an increase coming through. But the good news is that if you look at the advance decline ratio, that tells you a much better story. Because even after a pretty range-bound, lackluster kind of a day, you've got almost 1,800 stocks advancing and about 650 stocks on the declining side. So beneath the surface, there's plenty of action. And I'll just take some names to highlight. Some of these infrastructure plays, they've had a good run today. So stocks like IRB up about 3%, NCC's up about 5%. These are some of the names. And on the infrastructure play, I mean, we've been discussing BEML since morning because of the approval for a lot of the metro orders coming through. And that stock's been up about 3 to 4% right throughout the session. But go beyond, even beyond news. I mean, look at a Godfrey Phillips, about 11% right now. Angel One, 9% is the surge. IIFL Finance suddenly moving 11 to 12% higher. I know I'm sort of taking so many names. We'll quickly put them on the screen. That's just the nature of the mid-cap market. You go beyond the headline, and there's a lot of movement out there. Uflex, 11%. Something like an Imagica World, which typically doesn't come up on the screen that often, up about 9-10% as well. So basically, beyond the indices, there's a lot of individual stock level action going on. A lot of the PSUs are having a good run as well. But yes, the headline market seems to be in consolidation mode. So let's quickly kickstart the show and get you some trading ideas to begin with. Mitesh is with us. Mitesh, good afternoon. What have you made of the index consolidation today, and what are the ideas now for the last hour?
So I think the index, basically, good afternoon, Surbi, is not able to get past the higher level because the Bank Nifty is not participating. And I was looking at the hourly charts of the Bank Nifty. It's not very negative. In fact, post the big movement which happened on Friday, this looks like to be a mild pullback. And if the Bank Nifty can hold above 50,200 to 20, I think it should make one more attempt towards 50,700, 50,800 zones. And if it manages to clear that, then it should be even better. So in that sense, I think I'll keep maintaining a long bias. Right now, I have a buy on Virgio Paints. It's managed to get past this 200 average and is trading well above that now. So buy here with a stop at about 549 for targets of 590. And we had HPCL as a recommendation earlier. BPCL is the current recommendation. Buy BPCL with a stop at about 338 for targets of 360.
Thank you very much for that. From 76 to 146, that's been the journey of Ola in a span of just 6 trading sessions. Last week, remember, the company announced its foray into the electric motorcycle segment with the launch of the Roadster series. The stock continues to electrify the street. It's practically doubled since its listing. Sudarshan is joining in with some more details and numbers. Sudarshan.
What a move the stock has had since listing. IPO issue price was rupees 76 per share and the stock had listed almost at the same price. But since then, stock has almost doubled and in today's trade, it has hit intraday record high of rupees 146 per share. That is up 92% since its listing price. Also, it has added market cap of more than rupees 25,000 crore. On the listing day, its market cap was rupees 40,000 crore and in today's current level, the market cap is almost rupees 65,000 crore. But remember, free float is only 17% of total outstanding shares. What does it mean? It means only 17% of total outstanding shares is available for trade. Talking about the recent announcements, company launched Made in India 4680 Bharat battery cell, and its CEO says he promised faster charging and more energy storage via this battery. Also, it has entered motorcycle segment, launched Roadster portfolio starting at 74,999. Talking about the brokerages, it just have one coverage as of now. HSBC has initiated coverage with a buy call and target is rupees 140 per share. It says despite its conservative view in electric vehicles, it believes Ola is worth investing in as Ola's go-to-market and localization efforts are noteworthy and should attract investors looking to play electrification theme in India. And target price implies FY28 price to sales of 2.9 times and EV to EBITDA of 39 times for Ola Electric as per HSBC.
Thank you very much for that. In fact, earlier today, we did catch up with HSBC's Yogesh Agarwal, the author of that note on Ola Electric. We chatted with him about the EV penetration in India, competition, the motorcycle, its bet on battery. Listen in to his views.
At least for the next 2 years, things will be better. And it will be driven by 2-3 reasons. One, the costs have finally started to come down, especially the battery cost. I mean, just from last year, the cathode prices or costs are down almost 60% from the peak. And so that should help. And secondly, I think we have all been looking for a push factor, just pushing electric vehicles in the market, but we need to create a pull factor. So, and that pull factor from the customers will come when there are more options in the market. So next year, we're going to see a series of launches in four-wheelers. And in two-wheelers, anyway, the launches are happening more and more. With more launches, there'll be more options. And I think there will be some bit of a pull factor. It is very, very tough to electrify motorcycles. Just to give you a context, a theoretical range for a Splendor is 700 to 800 kilometers. And with higher power and higher range, it is still slightly cheaper than Activa, which is the largest selling ICE scooter in India. So I think to electrify a motorcycle, you need a much larger battery, and that will significantly increase the cost and the weight of the vehicle. So it will be a very big challenge to electrify motorcycles. Large part of the market will find it tough to electrify, which is why our estimates for FY28 are around 20%. But the good thing is even 20% from the current 6-7% means that the EV market will grow at 30 to 40% CAGR for the next 5 to 6 years.
That was a good discussion. You know, guys, we were talking about last week also, we were talking about Ola, right? And what does it mean for the other two-wheeler companies? Maybe we're all looking at it in the wrong way, because the question has been whether it hurts the traditional Hero and Bajaj, etc. But can it benefit? In the sense, can Ola's valuation rub off on the other companies? Remember, Hero especially has a 35% stake in Ather. Ather has about, I think, 15-20% market in electric vehicles. So, you know, Ola has doubled. I don't know what Ather is valued at. And this is it's a strong market. It's looking at what can go right. Nobody's looking at what can go wrong. So I don't know if there is a quick sort of buck to be made trading rally, but it's entirely possible that if this goes on, Ola we'll have to do the numbers, but it's possible that at least long term, whatever happens, happens. But I'm saying, you know, maybe there is there's a trade here on the upside rather than on the downside. That's Hero basically on the back of what's happening with Ola.
No, absolutely. But I think, Prashant, the point that you made last week as well, that's a point that I don't think the incumbents can ignore either, because 88% growth just selling scooters last year, FY24. 32% growth first quarter just selling scooters. Now, by next Diwali, when they get into the bike space, I mean, will those numbers start looking bigger and bigger? And most analysts on the street are expecting costs to go down, margins to improve, more profits, because they'll start making their own batteries. I mean, it sounds actually too simplistic, but 92% is the stock price appreciation. So let's put that to Deepan Mehta, really. How do we wrap our heads around what's happened with Ola in just 6 trading sessions alone? But hey, that's what they call a bull market, right? Dipan, hi, welcome to the show. So it's over to you now.
Yeah, Surbhi, that's what they call a bull market. And why just double? It can triple and quadruple also. I have seen Harshad Mehta rally. I have seen the .com bubble also. And that time also a lot of stocks didn't make sense. But they kept on rallying because of very heavy speculative activity and a lot of trader interest. And it's an easy trade in Ola Electric for the traders, you know, because there's so much of concentrated buying. And when stock starts to hit circuit, automatically it attracts a lot of players who just want to buy just before it hits the circuit, hold it for the next day and then sell it off at a premium of 4-5% or even higher. So what we are seeing is a lot of liquidity flow into one counter. And obviously the kind of float which is there has evaporated, which is why the stock price has gone up the way it has gone up. On a fundamental basis, it's very difficult to justify this kind of a valuation. Great long-term prospects. I believe in the story. And eventually, I think it'll start to make solid profits. But there are execution challenges. There are regulatory challenges, product acceptance, and all the expansion plans have to really play out well. So there are certain risk factors as they are in all businesses. And those are not fully captured in the stock price. So if you're a trader, you're an investor in Ola Electric, by all means, remain invested. You may trade in it. But a new investor entering at this price, I'm not sure he can make a good return over a long period of time.
Well, what is your view on the impact Ola's electric motorbike will have on incumbents? Because Ola's priced it very aggressively. It starts at 75,000 and the cheapest motorbike is, I think, at 1 lakh or a little more than that. So the pricing is very aggressive. So will it hurt any of the other incumbents?
See, Nima, I'm not really an expert on consumer trends over here, so I really can't say. And actually, Nigel has driven a motorcycle. I haven't. All I can say is that my next car is going to be an EV. That's for sure, so I can assess that. But whether a electric motorcycle will be a success, I'm not so sure. Globally, it's not. Globally, even two-wheeler EVs have not been such a great success. But that's because it's a very narrow market, small market globally. But yes, I mean, who knows? Stranger things can happen. And the important thing is that now Ola Electric is a complete platform, so they will offer two-wheelers, they will offer motorcycles also, and who knows, they may go to three-wheelers as well in future. And that's important because they'll capture all the segments of the market. And sometimes these niche plays also work out very well, as I've seen in Eicher Motors 10 years ago. Nobody could believe that a premium motorcycle could sell, but it did. So who knows, it could happen with a EV motorcycle as well. And one needs to wait and see. But on the whole, I think, the more important aspect is that, what are the risk factors at these levels and have they got captured in the stock price?
Okay, let's see. Let's move on and talk about Voltas. That's another big mover, up nearly 5-6%. Strong Q1 numbers. Brokerages too have raised the target price post the conference call. Sudarshan is back with us for more on Voltas. Sudarshan.
So Voltas has hit record high today, and as stock continues to see buying after a strong set of earnings for Q1 and healthy management commentary. Talking about the earnings, Q1 was led by a healthy performance by UCP business. The segment saw healthy volume growth that was almost at more than 67%, and also it has gained market share. Market share for Q1 has come in more than 20%. For FY25, company maintains high single-digit margin guidance. Talking about the brokers, most of them continues to have bullish stance. First one is Nomura. It has a buy call with a target of rupees 1,857 per share. It says growth outlook remains strong, and it has raised FY25 UCP revenue growth to 30% from 26% earlier, and it adds priority of market share gain or margin by the company is a step in the right direction. Jefferies too has a buy call with a target of rupees 1,770 per share. It has raised FY25-26 EPS estimates by 10 to 12%. UBS has a buy call and target is raised to 1,960 per share. It says company is optimistic on demand for Voltpack products in Q3 FY25 led by festive demand. MS has equal weight call with a target of rupees 1,225 per share. It says company guides for high single-digit margin in UCP business, that is given elevated competition that company is seeing in the segment. Kotak too has a sell call with a target of rupees 1,100 per share. It says limited margin expansion and unchanged guidance indicates intense competition, but it has raised estimates by 11 to 14%. CLS also has an underperform call, but it has raised target to 1,310 per share. Goldman Sachs also has a sell call and target is 1,310 per share. It says margin may have limited room to surprise positively in the future, but sustainability of ordering will be key for Voltas in near to medium term.
Thank you very much for that. Voltas up 65% this year, and it's doubled in the last 1 year. Dipan, Q1 numbers were strong. As Sudarshan pointed out, we've seen a lot of EPS upgrades post the Q1 numbers. But going forward, brokerages have flagged off that margin expansion is limited since the company is focusing on regaining its market share. So re-rating potential could be limited. That's what the bearish argument is. Voltas, after this kind of a rally, where do you stand?
So I think it's a great long-term story, and the summers are not going to get any cooler. It's going to get warmer. So the next season may be even better for the air conditioning companies, including Voltas. Also, the projects business has got re-energized with all these data centers and so much of urbanization, and they're winning good orders in the Middle East as well. So from a long term, the business has great dynamics. But look, valuation at 117 or thereabout times trading 12 month. I don't know whether the risk return profile favors you. At correction, very positive on all these air conditioning companies across the board, be it a Havells or even IFB Industries has got an air conditioning business, and even some of the contract manufacturers like PG Electroplast, Amber Industries. You should have one or two of these stocks in your portfolio if you don't have them. But I would wait for a 15-20% type of a correction when there is some amount of margin of safety. But all this entire industry, this air conditioning industry, we're very positive on that. But as I said, I think wait for a correct entry price.
Dipan, long list of movers today, right? And I'm going to just read these out, and if anything strikes a chord, weigh in. Dipan. There's Angel 1, 10%. Gravita, I think, saw a recent initiation. We'll have these stocks up. Gravita is up 11%. Stocks at about 24.51. It's come up very quickly. Last, 4 days from 1700, stocks at 24.50. So that's fast-paced. There is Boriput Laboratories, which has come up to about 68 rupees. CAMS is another one, which is up another 7%. Keytex is up 40% in 3 days flat. Uflex is up 12% today. Again, I mean, Uflex was at 560 2 days back. It's at 750 today. Just incredible. Edelweiss is another one. I mean, I think it started at $60. I mean, it was at $60 about 6 trading sessions back. It's at 90 today. So that's a very large move coming through. And a beaten down name like IIFL, which is, of course, still waiting for the RBI clearance on their gold lending business. Of course, it had been completely sold out from 530 to, levels of about under 400. It's come up to a more respectable 450 kind of levels now. So that's a big one right there. Deepan, anything interesting here?
See, I think you can classify them into two groups. IIFL and Edelweiss going up purely because these are nice low PE stocks which still can generate some amount of growth. They have outperformed their peer group, and Edelweiss especially has got other ancillary businesses also like asset reconstruction, which are quite interesting. So yes, I think you are seeing PE re-rating over there. Other than that, the likes of other companies you named, I think something positive going for them. Uflex, we've seen across the board all these flexible film manufacturing companies have done very well, cyclical upswing, you may say. Gravitas, because of expansion, good corporate numbers. Also, Angel 1, I think the threat of derivatives volume gradually getting priced in. So something positive is happening, and investors are on the lookout for new ideas or some positive trend. And these companies are in the limelight just now for various reasons. So they are being bid up higher and higher. I don't think any of them, the valuations are completely out of whack, like say Ola Electric. So if you're an investor, I'd remain invested in these companies and look for the next fresh ideas, which traders or investors will target. And typically that company has to be a reasonable valuation, and it should not have rallied like, the way other stocks have rallied. Like, if your stock has gone up 10, 20 times or so, it's best to avoid because the correction will eventually take place. Or look for companies where some positive news flow can be expected in terms of new order wins, because now the elections are over and we could expect a lot of new order flow on the engineering construction side as well.
Okay, it's a good day for mid-caps, really. Got that point. Just to add to Prashant's list, 2 more stocks. Matrimony.com, something we don't discuss too often. Matrimony has hit, I think, 20% today. Very volatile, but the last couple of sessions have seen the stock fly higher. There you go. There's a circuit on Matrimony. And the one that we were discussing last week, Panacea Biotech, remember it started rallying. It's a small stock, started rallying because they're doing clinical trials for dengue vaccine. Market got excited. Even this afternoon, there's follow-through buying on Panacea. So it's basically a good afternoon for mid-caps and small caps.
Shadi season is back. It's coming, right?
Yeah, it's coming.
Perhaps some excitement ahead of that. But yeah, excitement all around in the mid-cap and small-cap universe today. Deepan, we'll thank you on that note. Appreciate you being with us. Have a good rest of the day. And we look forward to connecting again later in the week. Right now, we take a quick break. On the other side, Vaibhav Sanghvi, CEO at ASK Hedge Solutions, joins in with some views on the market.
नहीं अगर उसको
Welcome back. So the market's spending some time around the flat line today. It's been that kind of a session. Nimesh, however, has had an exciting day because he's been, I think for the most part of it, at the Motilal Oswal conference. Yeah, he's still there joining us from the scene of the action. So Nimesh, I know you're going to get some guests with you as well and give us a feeler from the inside. But let's talk about the dealing room chatter. And what all are you picking up? Very range-bound day today.
Well, yes, Surbi, first a bit on the conference. It's been well attended. There is a lot of buzz around as well. I've managed to pick some lot of chatter as well from many of those fund managers. But broadly, from a market point of view, it's been a bit of a quiet day of trade. The Nifty is pretty much range bound, but it's the broader markets which is relatively outperform, and that's where the action seems to be. Even at the conference, the mood seems to be more biased towards the broader market stocks. So there are a lot of interest, a lot of meetings also going around at the Motilal conference, largely in the mid and small cap sector stocks. So that's been the key key takeaway so far, the day one of the conference. Even there are a lot of themes now which have been talked about. The same was the case in the MK conference as well last week. Look at some of those themes which have done well today. The EV theme is doing good. But recycle as a theme has been talked about very much for the last couple of days, and many of those stocks have done well. The likes of Gravita, the likes of Ganesha Eco, all are buzzing in trade. So again, as I said, there is a lot of interest in the broader market, and a lot of themes is well been discussed. From a flow perspective, there's going to be a small MOC basket buying, is what I understand, towards the end. So maybe last half an hour we'll see some impact in the non-Nifty stocks. From a flow perspective, but broadly, while the Nifty has been consolidating, there is a lot of interest in the broader markets today.
Nimesh, you also said that you picked up some chatter while you were there. So tell us a little bit more on individual stocks, some tidbits.
Well, Rima, the big theme seems to be blocks. There are so many indications of large blocks coming in, or for that matter, large blocks which have been done today. So the first one is Zaggle. We saw a large block trade in that particular name. Nearly 4% equity got changed hands. I understand the venture capitalist was the seller in today's block. So disclosures will be quite interesting. Second, a couple of large blocks expected in the next few days. One is Zomato and the other one is Interglobe. Both have highlighted in the past that maybe you'll see large blocks. For Interglobe, the reason being the Ganwal lockup of 5 months has got over. So now anytime the block can come. And again, Ganwal could be a potential seller in that particular block. And again, there is going to be a 150-day lockup. That's been the trend in the past blocks. And even for that matter, in Zomato, there has been a strategic investor who's looking to sell a large block in Zomato as well. So again, there could be a potential block there as well in the days to come. The other large block which is going to come, and it's potentially going to be a clean-out trade, is going to be in Kalyan Jewellers. Again, the private equity investor has been a seller in the past, but now it looks like is going to be a clean out trade in Kalyan Jewellers, which can come very soon. So that's again a large potential block to track. The other, from a flow perspective, couple of stocks. First is Trent. While everybody argues about valuations and the way the stock has doubled in the last 6 months, even at these levels, I understand there are block bids and some large global funds are looking to buy into Trent, and they are looking for blocks as well. So Trent has been buzzing largely on back of very strong buy flows from larger global investors. And the other one is Hero MotoCorp. The management was at the Motilal conference as well, spoke about the outlook, and they were quite confident about the next few quarters. But again, from a flow perspective, I understand one of the leading long-only fund was an active seller in Hero MotoCorp. That's largely over. And now I understand some domestic mutual funds are looking to buy as well. So that's the reason why even Hero MotoCorp is buzzing in trade today.
Okay, all right, Nimish, have fun. And we look forward to the next conversation, which we're going to come back to you for in just a bit from now. Lots of blocks, and why not, right? Markets are buoyant. Interglobe, Zomato, and others as well. Vaibhav Sanghvi is CEO at ASK Hedge Solutions. He's with us. Vaibhav, good to have you with us here. Good afternoon. Thanks for your time. Again, markets doing well, but, it's more measured, right? It's not a race straight to the top. More measured. I mean, the US is, I think, it saw a bit of a bigger swoon, but it's also recovered very fast. The S&P sits just 2% away from its highs. What's your sense, Vaibhav? Are we looking at a bit of an uptrend here, building an uptrend here over the next few weeks?
No, Steve, Prashant, I think this week there are important events, including the Jackson Hole. Let's see what comes out of that. However, if you also see that the global volatility levels, after the recent spike which had happened, has kind of cooled off, along with your domestic volatility levels as well. So what effectively happens is basically that money gets kind of starts getting deployed again, and you will see or probably this is some amount of reflection of the confidence in terms of the data which is kind of expected going forward. So we do think that the chances are there that we may see possibly a shorter term upswing because of the cool off in terms of the volatility levels. Having said that, of course, valuations is something which everybody is looking on to, so that it's going to be a little range bound, with kind of market giving opportunities on a bottom up basis rather than a broad spectrum kind of bullishness as we see.
The market is also latching on to themes. So Nimesh was telling us how recycling, electrification, or even these entire, cooling segments, Voltas, Blue Star, these are stocks which have been gaining a lot of traction. Can you highlight a few themes for us which you like?
No, of course. I think the way the market is structured, we do think that consumers, including both consumer discretionary and staples, are something which are likely to do better going forward. Of course, rural side of the economy is likely reviving. And last but not least is basically the monsoons have been pretty favorable. So consumers on an overall sector is something which we like. In addition to other non-consensus kind of sector is basically the IT. So IT, consumers, pharma from a bottom-up perspective are the sectors which we would be looking to kind of invest in. And if you see, the nature of these sectors are largely defensives, and that is how we are looking at the market currently as well.
Okay, got that. Vaibhav, hi, good afternoon. Good to have you on. The big debate has been about what's happening in the auto space, right? With Ola really hogging the limelight. I mean, it's been an absolute stunner since the listing day, almost doubling, right? And one is wondering what kind of disruption we are in for. And these stocks have been, the likes of Bajaj Auto, they've had a great run in the last 1 year. There's also the rural recovery play, which some are sort of talking about with respect to the likes of Hero Moto. But given what we are seeing, and then let's not forget the four-wheeler space, Tata Motors is going to go through a demerger. So there's a lot going on. What is your overall stance on auto? What are you liking, keeping, avoiding in this large side of the market?
No, of course, Surbi, I think autos looking at a lot of action within the sector. Partly also, kind of euphoric valuations in some of the segments. But when we look at two-wheelers, when we look at rural recovery, you will continue to see some amount of good numbers coming on from there. In passenger vehicles, though the underlying retails have not been very exciting, we'll wait for that to kind of recover. But in the advent that when the monsoons are pretty neat, I think we may see some amount of revival also happening into tractor segment. Of course, CV also have been continuing giving the kind of robust volumes on a month-on-month basis. But it's like, I mean, in some ways it is kind of diverse, where PV is not performing, but the rest of the segments are performing. And lastly, that the commodity prices impact, which had happened in the last quarter, whether it is continuing going forward as well or not, is something yet to be seen. So mixed trends with certain pockets kind of giving you the opportunity to kind of probably trade in this.
What about banks? Where do they stand in your portfolio? Because they've been testing everyone's patience. You find value in it, but it's just not rewarding investors so far.
No, we've been actually, consistent with our view, saying that banks, we are kind of neutralish to probably slightly negative as well. The reason is that, here is a situation where we've seen best of interest margins, best of credit growth and best of credit asset quality cycle as well. Incrementally, what we may see is basically one, pressure on growth or margins purely because you have to have, higher cost deposits. And lastly, that from a personal loan segment in certain pockets, including your credit cards, we are seeing, in MFIs, we are seeing some amount of pressure on the asset quality as well. So going forward, probably, within a year, we may see earnings kind of, earning estimates kind of getting downgraded in this whole segment. Of course, the valuations have been reasonable, but I think that may stay reasonable, in absence of strong FPI buying coming onto the Indian markets. However, if if FPI kind of investor interest comes back, then you may see some amount of traction, but otherwise I think we should be neutralish at best, in this sector.
Let's put up metal stocks. I mean, the Nifty metal index is spiking as we speak, and I think it's up about 1.8%. And let's just have these names, Tata Steel and JSW Steel from the steel space, but Vedanta, of course, I mean, there's, a stock-specific, a company-specific reason as well, the stake sale in Hindustan Zinc and deleveraging, etc. That's another story. Let's look at Hindalco and a few others as well. Tata, I think, was up 3, Vedanta is up almost 3, and there are, Hindalco is up about almost 4% now at this point in time. Vaibhav, any thoughts here? I mean, it's a global-facing sector. And I was reading this comment from the Chinese steel major, Bao Steel, warning of severe stress for the steel industry at least. And they produce about 7-8% of world, global steel. Now, that's, of course, comment coming from Chinese steel maker. I don't know what the dynamics here are and what impact that could have. But stocks are doing well today. Any thoughts, Vaibhav, on the space?
I will not go by the temporary kind of momentum on the metal space, especially the base metal. My sense is basically when in a scenario when from a global perspective, we are not looking at good growth in terms of the economic numbers, and especially from China, where, which kind of leads the whole metal pricing. My sense is basically you may have a tactical trade here or there, but from a medium term basis at least, we would not be keen, getting into this space. Unless and until, I mean, you can see stupendous growth coming back, which is unlikely to see. My sense is this sector will continue to remain under pressure. So at every kind of, rise, I think you will see continued pressure coming on to these names.
All right. We'll leave it there. Thank you very much, Vaibhav, for joining us and running us through that perspective. Point taken. Bit of a tactical move here, according to Vaibhav, as far as steel and metals are concerned. We'll take a break. We are back on the other side. We'll be joined by a panel of guests from the sidelines of the Motilal Oswal 20th Annual Global Conference. And we'll have Nimesh conducting that interview. Stay tuned. Coming up.
Welcome back. Mitesh is back with us for a few BTST calls. Mitesh.
I have a couple of metal names on the list, and Hind Copper is one of them. And that's also something which we've recommended to our clients. So disclaimer that there could be vested interest. BTST here with a stop at 320 for targets of 330, and the other one is JSW Steel. That's a BTST with a stop at about 905 for targets of 935.
Okay, all right. Steel and metals is what we were discussing, and some trades coming through in that space from Mitesh. Alan Kim is partner at ARK Impact Asset Management, and Atul Mehra is fund manager at Motilal Oswal AMC. They're sitting down with my colleague Nimesh. Nimesh, over to you.
Thanks, Prashant. As you rightly pointed out, interesting to get different perspectives on the market. One is Kim, he's from Korea, and Atul is from the Motilal Oswal AMC. Kim, thanks for joining us. You've been managing a lot of money in Korea, but you've also looked at Indian investments for a while now. Sitting outside India, what is your view on India currently from a valuation perspective and from an opportunity perspective?
Yes. So for us, I speak for Korean investors. So for us, India is a beacon of high growth. So compared to Korean market, investors sense high growth and excitement from Indian market. But in terms of valuation, it's the multiple, absolute level of multiple itself is quite different, a lot higher here in India. So I think that's becoming a sort of a hurdle for many Korean investors to accept.
Sure. I understand outside Korea, the other big investment for you is India in the emerging market. Of course, US is the other big investment for you. What has been changed from a Korean investor point of view, looking at investing into India?
Right. So I think the biggest change is that Korean investors are now seeing exits from Indian markets. So before, whenever they invested in other emerging markets, exit has always become an issue where IPOs are not happening, and even if it did, the liquidity was not enough for the exit to be actually made. Whereas Indian market, it's one of the largest stock markets in the world right now, and there's no more doubt about the exit side of it. So I think that's making Korean investors much more comfortable in investing in Indian private markets.
Okay. Alan, I was looking at a portfolio, and one thing which struck me was your investment in Ola. It just got listed 8 days back, and the money has doubled for most of the investors. A, are you still holding on to Ola? And B, what has made you excited to invest in a company like Ola in India?
Right. So, yeah, obviously the investors are very happy about the result. But the reason, I think, not just for us, but for many of the Korean investors, their first experience of investing in India was back in 2017-16 timeframe, where digitization of India and mobile proliferation of India became quite known amongst Korean investors. And that story, digital growth story, is quite familiar with Korean investors. We've experienced it ourselves. We've seen it in China. So I think it was meant for many of us, it was easier for us to imagine how India trajectory will grow from there. So that's when we got interested in those types of companies in India.
But if you can share your experience on, have you invested back in Korea in any of those EV bike companies or EV motor companies, and what has been the performance there for you all, and was that a reason for you all to invest into Ola in India?
Oh, absolutely.
It's still loss-making, that's why.
Yes, it's still loss-making, but it's a different story compared to Korea, because Korean company EV chain is mostly focused on the manufacturing side of it. Sure. And it's looking at the global, customer base. Whereas India, we are focusing more on how Indian consumers are using the service itself. So the two aspects are quite different. One where Korean EV manufacturers are, clearly riding the global growth cycle, whereas India, we're expecting more of Indian middle-income consumers growing and using the service itself.
Sure. Atul, if I can ask you the same thing, Ola is now not a small cap. You manage a large cap fund at Motilal Oswal, $5.5–6 billion market cap now. What is your take on, I understand you can't talk about stocks, but in general on the EV space in India, and would you look to invest in this kind of opportunities?
So, firstly, thanks for having me on the show. So, yes, so in terms of EV, if you look at it as a theme, it is a theme which is evolving. Yeah. We're already seeing it in case of two-wheelers, the penetration, especially on the scooters, is about 16% on all new sales. So we are seeing that increasingly especially for the vehicles which are capable to be on the low, smaller battery sizes, the adoption is much faster. Wherever you move to a higher battery, larger battery size, that is where things get more expensive because the largest component in the manufacturing of an electric vehicle is the battery. So the use cases will keep evolving as and when like battery prices over a period of time decline. But so far, like anything which has a small battery size to do with it, like the scooters is the prime example, that is absolutely taking off. Like we are at 16% now, maybe this can be 50% in the next 3 to 5 years time. And that is where we are seeing a great amount of traction. So yeah, we are looking at multiple spaces within the ecosystem. And I think like things will evolve. Having said that, I would also like to add that I think also the automobile market in India will be a story of coexistence of multiple technologies. Like we have seen that even in developed markets like US, where hybrid is growing share over the last few years.
Yeah.
So we believe that even in India, there is a chance that you will have multiple technologies coexist, and it will not necessarily be EV alone, because we also have to understand from the perspective that supply chain, for instance, like most of the supply chain for EV in India or globally is the origin of supply chain is in China, right? So a lot of, like we see the geopolitical issue arising from most part of the world. Most countries also, I think, will look to diversify their ecosystem and not having an over-dependence on one over another.
Right. But in general, for the autos, I was reading some reports, and many of the sell-side analysts now believe that best is in the price. There could be some distortion, and volumes could decline from here. A couple of them have actually downgraded the auto sector to neutral now after the quarter one earnings. What's your general take? Because I heard the Hero management here, he was quite confident.
Yes.
Are you holding some auto names as well within your portfolio? What's your general sense on the auto sector stocks?
So I think in terms of from a medium to longer term perspective, things look absolutely fine, because India, if you look at it, it still remains quite underpenetrated on the four-wheeler side. So overall, if you look at it from a growth perspective, from a medium term perspective, things are fine. Now in the near term, depending on analyst to analyst on the sell side, obviously things differ on views on the near term. But I would believe that the medium term story looks really good in terms of autos in India. So we own some of the automobile manufacturers in India, and we believe like things from a medium term perspective look very good.
Sure. Atul, while you manage the large cap funds, I want to ask Alan about the opportunities in the mid and small cap. You've been doing some shopping in the broader market stocks within India in the mid and small cap space. I understand you all have bought into the Morpen QIP as well. Generally, from the broader market stocks in the mid and small cap, what has been your experience so far, and are you looking to aggressively look at investing into the Indian mid and small cap companies?
Yes, we are. I think for us, the Indian small and mid cap gives a very unique alpha creation opportunity where the growth of the company itself is in the tens and even hundreds of percentages per year, and that those types of opportunities are simply not present in other developed markets. So I think in that aspect, finding those jewels, if you will, even just one or two of them would help our portfolio very much. So in that sense, we're very keen on finding those opportunities.
Okay. Alan, the other interesting thing would be a lot of Korean companies are going to list into India. Hyundai, for example, is looking for an IPO. Would you look to invest in India, in Hyundai IPO?
For that, it's really ironical because Hyundai itself, its headquarters is obviously listed in Korea, and their PE multiple is at mid-single digits.
Okay.
Whereas I don't know about how the Indian IPO is structured, but I presume the multiple here would be much higher than it is in Korea. So for Korean investors, I think they'll judge that, hey, if headquarters are trading at this multiple, we'll rather invest in Korea. But I think it's a very smart move for Hyundai itself to be able to raise this much capital in such a lucrative market.
Sure. Atul, you've also participated in a lot of the IPOs recently, and some of them have done really well for you.
Absolutely.
Is that an opportunity which, as a large cap fund manager, you find very attractive? That there is so much of IPO pipeline that will help you to invest into larger companies?
Yes. So I think the key is, even in a large cap mutual fund, 80% of the fund has to be invested in large cap companies, but 20% we are allowed by the regulator to invest in any market cap company. So in the fund that we've been running, our fund has so far been the best performing large cap fund since inception, with 8% outperformance. Now the key is we have been able to spot a number of new IPO opportunities, and we have a number of exciting new businesses which are coming to the capital markets. Like first in, like for example, shared workspace, then telecom, regional telecom, and lifestyle.
Hexacom has been a great investment for you,
yes,
right?
Hexacom has been great as well. So we are seeing a number of new interesting businesses coming to the market, and we have been able to identify and add those stocks to our portfolio, which have generated the returns as well.
Sure.
So I think the IPO pipeline looks very strong, and the lineup is like a really large one, which will help us identify new names as well.
Atul, Alan, thank you very much for joining us. We're just running short of time, close to market closing. But thank you very much for sharing your perspective.
Thank you. Thanks for having us.
Right, Nimesh, thank you for that conversation. Indeed, a very, very interesting one. Well, the market hasn't moved too much, still about 40 points up on the Nifty. We do need to take a very quick break. We'll come back and we'll be in the final leg. I will get you some more stock ideas in just a bit. Welcome back. Just a couple of minutes to go before the day closes out. We have Anand Tandon joining in to take us through the last leg. Anand, good to have you on. You know, today's been really all about individual stocks, some news-based, some earnings, etc. But I just wanted to discuss a PSU company, BEML, in case you've had a look at it recently. I mean, some of these stocks which are involved in metro construction, they got really excited because the cabinet has approved, more projects across different states. Your thoughts on whether there's still a play here BEML or any other private sector name perhaps that would benefit from such orders?
Well, I don't know how much quantity of stuff GEML can supply. I can tell you that, for example, in metros, even something as basic as a sliding glass door, which costs roughly 1 crore per panel, is imported. So, I'm not sure that we have any kind of significant advantage on technology for any of these companies. Maybe they will be getting some orders in terms of a little bit of the, motor parts or whatever. But does it make a lot of sense to be investing based on that alone? I don't know. The cost per metro is now ranging between 400 to 500 crores per kilometer. And that makes metros generally very expensive and largely prohibitive. So, you would have to see how these projects pan out as well. Overall, I don't think I've changed my view overall on any of these companies. Largely, you cannot keep on bidding them up on the basis of a new order or a new order pipeline. The pipelines are such that they are not able to implement most of whatever they have already as an order supply. So it doesn't really make sense to already increase the inflated multiple for them.
Anand, afternoon. Many of these mid-cap banks, financials like Ujjivan Small Finance Bank, RBL, Equitas Small Finance Bank, Bandhan Bank, these are stocks down 20 to 30% since the beginning of the year. Anything outside of the large private sector banks that catches your attention at current levels?
Well, I think among the non-bank financials, the housing finance companies are showing better numbers. After the merger of HDFC, you have to look for other companies. And some of the new age ones are not doing too badly either. So while the others like LIC, GIC, etc. are not particularly expensive, the new companies are growing perhaps a little faster. While one has to be a little circumspect on their ability to have a matured portfolio, the reality is that the numbers still are showing up quite dramatically. And hopefully, unless they are financing chawls, you will have real estate which you can actually sell if you have to.
The street is also very excited with the potential of India's electrification journey. Which is the best way to play it?
There aren't too many players that you could actually be investing in terms of electrification. Obviously, the equipment manufacturers would be the way that you would look at it, but the equipment manufacturers are already priced to perfection and then some. So if you still want to continue to play that momentum, then obviously you could go there. The likes of BHEL, etc., are humongously overpriced. It is not as if they are marginally overpriced. So, the rest of it would be in the form of transformers and perhaps meters, which are smaller players, and one could perhaps look for some of those opportunities there. But I think, again, if you are looking at even small companies in transformers, etc., they are reasonably well priced. They are not as strict at 65 times, but even then they are 35 times. And remember, this is largely a business which is highly cyclical, and you're probably at the top of the cycle. So yeah, but those would be ones that you would be looking at, essentially the smaller equipment manufacturers.
Got that. Anand, thanks for that for now, but stay with us. We'll continue our discussion in just a bit. Let me just quickly wrap up the market action here. 40 points higher is where the Nifty will be. So off the day's high. So the day's high was at 24,638.